Hey, it's Michael Saul, also known as Tiny, with the market video for the week of October 14th, 2013. So let's take a look at last week. We had a coil. On Monday, we rallied, but then gave it up. Then Tuesday expanded to the downside. Wednesday went a little bit lower, trapped the, I think it's time to get short here crowd. And then Thursday, we had the snapback rally. And then Friday, we closed at the highs for the week. So I am looking for us to continue higher, even though as I'm doing this at 9:42 p.m. on Sunday the 13th, the futures are down 12 points, and you can hear my kids are still awake because there's no school tomorrow, and my wife is sick, so I have to put them to bed. So I figured I'd do the video first. Anyway, so I am looking for us to go higher, even though we're down about 11.5 points right now. I think that after a move like this, the best scenario would be to pause here and then take a little rest, and then from there go higher. Now, Monday, the 14th, is a bank holiday, but the market is still open. It's Columbus Day. So I'm expecting light volume, which isn't a hard guess when the banks are not open. But that would be just what the bull doctor ordered. Okay, there's still the shenanigans going on in Washington with the debt ceiling and the government shutdown and all this other stuff. Last week we rallied. A lot of it was on speculation that they would come to a deal. I think they're going to come to a deal sooner rather than later, but what do I know? When it comes to the government, I don't think anybody knows much. All right, so I'm going to be watching weakness early on for a potential buying opportunity. Weakness early on in the week, and I'm going to be using these moving averages here to see if we come back and make sure that we're holding these, and then I'm going to be watching intraday for a pattern to set up. I'm not just going to say, oh, we're down, let's buy it. No, I'm going to be watching for weakness that sets up and a pattern to lean against intraday. So the Dow, got through the 50-day moving average. That's good, but it's lagging. Right, hit the 200-day almost to the tick here, just a little bit under the 200-day, and then it rocketed from there. The NASDAQ looks like it's headed to the highs, looks closer than the S&P, and obviously closer than the Dow. The Russell is, any upside is going to get there. It's right there. And the mid-cap, same deal. Any upside is gonna get to the new highs here too. So I'm looking for us to move higher here. I don't think the work gets done until the S&P gets there also, and maybe the Dow. But one of the things that I'm concerned about is volume. Volume has been horrible on the upside. Okay, the market has been, when the market's rallied, the volume has been pulling in. That's really not a bullish sign, but I'm not going to fight price action. We have seen this before. We have seen the market rally on lighter volume, then it goes down, and we've seen it for a while. So, I mean, if you fought it the first time you saw that, you are buried. Okay, you're not in the business anymore. You're probably squeezed out. So I'm not just going to look at volume, but it's definitely a concern. By the time the S&P gets to the highs, if it gets there on its last gasp and no fresh volume coming in and no good leadership coming in, then it could be setting up for a nice double top. All right, a little too early to predict that, but definitely something to pay attention to. And the other thing that we also have to look at is this possibly a complex left shoulder here, either this or this and this? Is this the head? Then maybe we don't retest the highs. Maybe we start forming a right shoulder, and maybe that puts in a potential topping pattern. I mean, for now, it looks like we're going higher. I'd like to see a pullback first before we do. But, those are the other scenarios that you have to keep in mind. Okay, one stock to watch this week is Apple. Apple is in a coil here, and that says that we have to watch for this to go either way from here, either up or down. Where it's set up right now, which is above the moving averages, suggests that it's going to be tipping to the upside, but the fact that it's in this coil is saying that it's at an equilibrium point, and we should be watching for a break either way. But it's more likely than not that Apple will not continue to be this compressed for very much longer. So the stock for this week is to watch Apple. I'm leaning to the upside, but we have to be ready for a push out of this either way. And another possibility, which is unfortunate when we get caught up like this, is what I like to call the tree shake, where we go up here and then we come down afterwards. So you trap all the longs, or just the opposite, where we go down, we trap anxious shorts, and then we go up. So that's, putting another wrinkle into things. But definitely watch this one. Obviously, it's a very popular stock. A lot of people watch. It's also an expensive stock. But, if you trade options or you trade the stock itself, it could offer some opportunity when it does tip its hand out of this coil. Have a great trading week. I will talk to everybody in the daily email, the daily newsletter, or in next week's video.